Hello and welcome to another MCO market update on FET. FETCH.AI is currently printing higher highs and higher lows. I am tracking here two different scenarios. Both are at least, you could say short-term bullish, especially as long as we are holding above the 78.6 retracement. Let me actually remove the upper section there of that blue box. We don't need that one anymore. Try to keep it clean here, but you see it a little bit better. That's our main support area at the moment to keep the overall bullish scenario alive here on the chart. And it's between 40 cents and 54.2 cents. I mean, that is, as long as pullbacks remain corrective, I will see them as a B wave. The yellow scenario seems to be the one that's going to work out, at least based on what I see right now. Tracking the move up as an ABC structure. I explained that in yesterday's video in more detail. In yesterday's update, we took a look at the bigger, the larger context, the overall larger degree, larger time frame context, and the idea was that because of the market's extension here, or the price extension that happened from the 16th of April low to where we are now, I mean, we've reached a 100% extension. Assumption is this is an ABC structure because the A wave and the C wave tend to have the same length. Sometimes the C wave is a little larger, a little longer. So I would still see the prices pushing a bit higher, potentially for one more high, even though we reached already, you could say, minimum expectations for a C wave. So, I mean, if it now starts a pullback, we call that a B wave. Looking at the nano level, it looks like we might push a little bit higher. I will show you why. If I zoom in a little bit, you see that actually. You see that in the C wave that started on the 16th of April, obviously we're tracking 5 waves up. I mean, that's essentially what a C wave is. It's a 5-wave move. 1, 2, 3, 4, 5. That 5th wave could get 5 waves. It could form 5 waves. It should really. And as you can see, I only have 3. I mean, there's only 3 waves up from the 22nd of April low. So looking at the nanostructure here, it could be that this is a small bullish flag or bullish pennant that's forming here. 65.9 cents is the nearest support I can offer. Any break below might be a first indication a top has formed. But until then, I would say it seems like the market wants to push higher once more to potentially 77.5 cents, maybe even 82.6 cents. Now, if we get to 82.6 cents, then the move to the upside will look more like a third wave, or at least we can consider it to be a third wave. Because the third wave, if it's long enough, we can add support for the fourth wave, and then the probabilities increase that the market will hold a higher low in a corrective pullback. Not as deep as a B wave, and then we will rather look for 5 waves up. That would be, let's say, at the moment an alternative, but definitely still a plausible scenario, and which would be confirmed further with a rally to 82.6 cents in the third wave. If we then get all 5 waves completed around 91.8 cents or higher, well, that would be further confirmation that we are actually on our way to all-time highs. With a 3-wave move up, it's a little bit more speculative, but as long as support levels are holding and pullbacks are corrective, we can also track the trend higher there. In the yellow scenario, it's just not as clear. So that means in the short term, expectations are still for price to push a little bit higher. I think most of that rally has been done before a pullback starts, but still there seems to be a little bit more potential for another push to 77.4 cents next. Below 65.9 cents, be a bit careful. And then further confirmation that a top of sorts is in place would be a break below 60.5 cents. So I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.